We welcome Dr. Lee Schulz, Associate Professor at the Iowa State University Department of Economics. How are you?
Good. Thanks for having me.
Hey, thank you for being here. So you're really at the intersection of agriculture and economics, right? Before we start diving into the issues, what's your day to day? What kind of trends are you following all the time?
Well, specifically, I'm the extension livestock economist. So, it really spans from looking at the supply and demand situation for the cattle and hog industries in particular. And that's, breaking down the fundamentals. But then obviously, as we get hot button issues or current events that impact those supply and demand fundamentals, that's where really, I am able to dig in and maybe provide some insight on that current situation and outlook.
All right, so you're one of these guys with 3 degrees, Wisconsin, Michigan, and Kansas, right? What did you take from each one of these stops?
Well, I got to provide some context to that. So it's Michigan State and not the little brother or what we'll call the one over in Ann Arbor, and then as well as Kansas State instead of the University
I was talking state of here, but
Yep.
yes, I take your point.
But yeah, I say that jokingly. But I think it is really, I've been at several land grant universities and been able to really one stay in the Midwest, but hopefully take away kind of the expertise and specific attributes from each school and the faculty that I've been able to work with.
Well, I had reached out to you seeing what was happening specifically in the state of Iowa, but then seems like it's kind of an industry trend. So you had a chicken processing plant in Iowa that's going to shut down, about 1,300 people or so, and then there is a turkey processing plant kind of in the eastern part of the state. Sliced turkey is kind of a big part of what they do out there, but a couple hundred jobs there too as they shift some of those operations to their Illinois facility. But when we step outside of Iowa, we're seeing some plants involved in meat processing, these meat plants shutting down, consolidating in some other places as well. What do you take from all of this? What's going on? Or is it several things?
Well, I think when you really maybe step back and really take into consideration what we've really experienced over the last roughly 5 years or so, you can look at, we've, as you think about COVID-19 and how that impacted supply chains, but then even going further in as we've dealt with really inflationary pressure and higher cost of production driven by labor challenges, that really speaks to, I think, what agriculture is facing. And I like to really talk about it as kind of, look at it as a cost price squeeze. So we've seen costs dramatically increase really across the board. And it's not just the live animal segment, it's also the processing. Even as we get into the retail segment, we've seen higher costs across the board. And we haven't seen prices respond as much. And I'll really draw back to that's a demand issue that we have. So demand was historically strong during the pandemic as we injected a lot of money into the economy, and that spurred a lot of demand across the board. And we benefited greatly when you look at pork and beef and the demand for those products. But now, as we've seen inflationary pressures impact consumer incomes, that's really unfortunately caused producers to pull or consumers to pull back. And that's really put prices under pressure, even though we've seen costs continue to rise.
So are we to the point that because we don't have that extra influx of cash coming in for consumers, will production have to drop? That basically we just can't sustain the production because our producers are so good, right? I mean, they're able to do so much and they're more efficient year after year after year. I mean, that's kind of probably a harsh point, but can we just not sustain what we're cranking out?
That's the current situation, but understanding that these dynamics they are very dynamic, or these both supply and demand are very dynamic, and so you don't want to be under a situation where you're chasing one or the other. And why I say that is, so yes, we could see if all else equal, you decrease supply. Yes, that's supportive of prices, right? All else equal, you increase demand. That's supportive of prices. And all else equal, you see a lower cost of production. That is, that will help profitability for producers. But these decisions, especially when you look at supplies, aren't something that we can change overnight. As we look at the supply chains, I'll take pork, for example. The pork we're eating today were decisions that were made 10 months to 18 months ago. Cattle, it's years ago, right? So we can't change that supply situation overnight, right? And that was the impact. That was part of the impact that we see during COVID-19, right? As we couldn't slow down those supply chains, it was much more difficult to do that. So when we had a processing capacity constraint, that was a challenge. And now as we're seeing supplies start to tighten here, especially when you look at the pork industry, the cattle industry is in a multi-year decline, and you've seen capacity relatively flat for packing. Now you're seeing situations where that capacity utilization is much lower. And what that causes for packing plants is an even higher cost. So yes, the cost of labor, the cost of building supplies, all those factors have increased, but also now you're operating at a lower capacity utilization. So that becomes much more costly too, because you can't spread those costs out over more units of production. And so I think as you're seeing consolidation, as you're seeing packing plants close, you're seeing them, especially multi-plant companies, they are moving that production to other plants that they have. So they're making these decisions and they're executing the decisions with company-wide capacity utilization and profits in mind.
And I think in some cases, and maybe they're more isolated, but they're looking at workforce potential and perhaps don't have the folks around or the space, what have you, so that they can add that second shift, or maybe more likely add the third shift. Is that another variable here, or is that too isolated?
Yes, I think that's a very fair assessment. So, and that goes to that capacity utilization. And when you think about like single shift plants are by definition less efficient than plants that you can double shift, right? Because you're able to, again, put more units out from that plant. And so if you have the labor supply in a particular region or area that allows you to do that, I think that's where you see companies maximize production from those particular sites. Now, I think again, this labor remains a challenge. It was a challenge before COVID-19, and it's remained a challenge ever after, right? And I think you're seeing where businesses are having to bring in people from a very large geographical distribution, and that becomes really difficult. So I think maybe more localizing or actually less localizing and putting it at a specific location allows them to maximize that. Because you think about the challenge from a business is, yes, you can pay higher wages, but all you're doing is taking people from other businesses, right? We're not creating more workers per se, right? So the challenge is it's not really you're not able to really mitigate that impact of the labor situation. When you think about an economy or a particular town or county, when you look at it at that level.
You were talking about demand. So how do exports play in all of this? Can that offer some kind of help with this, or is that just not a possibility realistically?
So that has remained, especially for the pork market, really the optimism that has injected some support into prices. Now, when we talk about demand, I think it is important to break the pieces of demand out. So the reason why we've seen demand weaken is we've eaten about the same amount of pork, but when you adjust for inflation, we paid lower prices for it. So you've needed lower prices to clear the market. And that's that income effect that we talked about earlier. The same goes for the export market. So we've shipped increasing volumes of pork year over year on the export market. And part of that is because we've been very competitive internationally. We're always very competitive internationally, but even more so now as other countries have seen lower supplies and higher costs, we've been able to gain some market share in some countries that we've already had a foothold and continue to grow that market share. So I'm really bullish continually on exports, but that can only give us a certain injection of optimism. When we think about pork, it's roughly 25% of our pork that's exported. When you look at beef, it's about 12% of the beef by volume. But when you look at value, higher prices obviously would be supportive as well.
Bullish on pork. That could be a bumper sticker, right? Hey, when you're talking about different levels of costs, what about commodity prices? I mean, you got to feed the animals. So as you look longer term, what do you see in there?
Well, as I'm going around and talking about those fundamentals and costs, I'm trying to at least impress upon producers that I think at least for the next several years and probably longer, we're really in a new normal for cost of production. And why I say that is, one, we've increased over 50% cost of production from 2020 to today, right? And that's been across the board. If you look at feed costs, you look at non-feed variable costs, fixed costs, they're all higher today than they have been in a long time, right? Now, as I look at 2024, my forecasts are roughly for 10% lower cost of production for cattle finishing, for hog production. That's coming from lower commodity prices, corn, soybean meal, distillers grain prices. Now, those prices have decreased more than 10%, right? Unfortunately for our crop producers.
Sure.
But when you look at livestock production, there's a lot of other costs that go in there, and those costs are not coming down, right? The labor cost, the interest costs, I could go on and on. Those costs are those inflationary costs that are hiked up. They're here to stay, and they're not going down anytime soon. They're probably at we hope going up at the level of inflation, which is hopefully again back to 2 to 3%. And so there, when I look at the high we've seen it in cost of production in the last decade was 2013. We're at those levels now with much lower corn prices, right? And so that's why, as I'm trying to put it into context, it's a new normal for cost of production that again is likely here to stay. Now the challenge is when you think about managing the risk of that cost of production and lower feed prices, we can manage the feed price component with futures and options. Those other cost inputs are harder to manage from a price risk management standpoint. So again, that's another challenge for producers.
I think I've heard you say just during this conversation, you probably brought up labor 3 or 4 times at least since we've been talking here. So as you game that out, where does that go? We've seen since COVID, you had a lot of people kind of reevaluating their lives and, demanding more money, higher paychecks, all those kind of things. And then we've also seen people leave the workforce. I mean, those are 2 very, very strong factors here. So how is this going to impact the industry where if you're paying people more and you don't have enough people, where is this going?
So I'm glad you brought it up in that context, because I don't use this term very lightly. I very rarely use it, but you could argue that we have a shortage of labor because we've continued to increase wage rates, but we haven't created more workers. Right. And so that's by definition, the definition of a shortage. And that, again, that was pre-pandemic and that continues to really be a constraint for agriculture. And I think it's even more exacerbated as you look at just populations in rural areas. We've continued to see those decline. So just that labor population has become tighter and tighter. And again, as I mentioned earlier, we're just competing for the same workers, right? So even, if you are able to attract a worker with a higher wage rate, you're taking them from somewhere else that they're working. So that really remains a challenge especially in the short term for agriculture. As we continue, we will see more automation, mechanization, but that can only come so fast, right? And as we think about a lot of the production in agriculture is very highly skilled labor, right? And so that's again a challenge. It's not only the number of workers, but it's the skills of those workers that they develop a lot of times on the jobs that are continuing to be less and less of the available workers.
This is probably a naive, foolish even thing to throw out here, but because following your point about how we are seeing these declining populations in these smaller communities where they have frequently these plants, that seems like that would seem to be an almost insurmountable problem here. We either have to convince people to move back to these smaller towns, or you have to move the facilities, right? Or mechanize. I mean, I appreciate you mentioned you can mechanize as much as you can, but that can go to a certain point.
And that's some of the rebalancing that I think that we are seeing, right? As you think about, some of the changes in, processing capacity, where it's located. And so, I think it's part of that. Also, I think you need to think about longer term trends in, where animals or where animal production is. So, I'll jump over to the beef sector. I know we've been talking a lot about pork and turkey and poultry here, but as you look at beef, you've seen really as a percentage of the national herd, you've seen cattle numbers increase here in the north. So, another way to look at that is we've seen larger declines in the southern plains like Texas and such. So what that means is, there's pent up demand and need for processing capacity here in the Midwest, as opposed to some of the more historically cattle producing regions. And so when you look at additions in processing capacity for beef, where are they coming online? It's places like Iowa, Nebraska, where we've seen a growing share of those cattle and the need for that processing capacity. So that's part of those decisions too, is you have, decisions about labor and workers. You also have decisions about where those animals are and proximity to those processing plants, because over time we've become much more efficient and with logistics and transportation. So I'll take us back to really the beginning when we used to bring cattle to the population centers or hogs to the population centers where the processing occurred, and that's where the consumers were, right? Now we've seen it where we've moved that processing out to where the animals are being produced, and we bring the meat to the population centers. And so, but now we're facing challenges with labor where the animals are being produced and where the processing occurs. And so, it's those dynamics that really make this ever changing. And processing capacity, it's a rather sticky number, right? We don't add a lot of capacity or subtract a lot of capacity, well, especially add overnight, right? That takes building plants, it takes double shifting plants, it takes expanding plants. And so there's a really challenge. I would say the beef industry is really, kind of facing that. We needed processing capacity at the latter part of the last decade. Not so much now as we've seen cattle numbers decline. And this is when we're starting to see some processing capacity come online. And so you're kind of always chasing some of those inventory numbers, but it becomes difficult in adding capacity because that number's overall rather static.
This maybe push you on the spot unfairly, but those awful wildfires they had in Texas, you were talking about Texas, I thought I saw maybe 8,000 head they lost, but so much damage there as well. Does that further strain the process, or is that too isolated?
Well, so certainly for the producers locally, those are dramatic impacts, not only on animals and infrastructure, and our prayers are out to them, and we've seen a ton of support from all over the country, right, centered on there. Now, markets locally certainly can be impacted. There is some cold cow processing kind of in that area that has the potential to be impact. Obviously, the longer the impact is, the more possible impact on animals. So again, but we need to take the local impact versus the overall national impact. It would be very difficult to tease out the specific impact of those fires on supply than the overall fundamentals of just very tight cattle supplies that are very supportive of these cattle markets currently.
All right, let's close out with this. What would, of all the things you monitor, and there are so many, what's the biggest wild card factor out there do you see for 2024?
So it's an easy one: demand. Demand will certainly dictate, how strong prices can be, how much prices can rebound, especially as we talk about the pork market, how fast they can, and it's really the hardest one for us individually to impact, right? A producer can change the supplies on their operations, right? They can grow the supplies as profitable conditions dictate, and they can contract their supplies as unprofitable conditions dictate, right? But when you talk about demand, and I'm going to sound a little bit like an academic here, demand is impacted by consumer incomes, prices of substitutes and complements, and tastes and preferences of consumers. Individually, we can't impact any one of those, right? Those are, and collectively through like the pork checkoff, the beef checkoff, with education and promotion, we can impact demand. Now, it's hard to impact consumer incomes though, right? And that's the big issue that's impacting demand right now for proteins, is that consumers, their discretionary income has shrunk, right? And so they're having to be more picky on what they can purchase, and that's impacted demand. Now, that's both good and bad. And the good part of that is that it's not a taste and preferences. We know that consumers, when they have money, they buy beef, they buy pork, they buy chicken, and they continue to buy it, right? That's the story of 2020 and 2021. That's the good news, right? The bad news is, it's hard for us to affect or impact consumer incomes, right? Those are bigger national, economic and policy debates that we'll have, and sometimes take much longer to be impacted. So, I think the industries themselves are in a good position for a launching point once we do see consumer incomes improve. But at least for now, that's been very, very much a pressure point on prices. And broadly, it's not a U.S. consumer thing. It's a global consumer thing, right? As there's been fears of global recession for some time now. And that's really weighing again on consumer demand and prices that producers are receiving.
We appreciate the breakdown. Thank you much for the time.
Thank you.